and then show that you subtract purchase price and subtract labor, materials, holding costs, all of that stuff. Mistake people do, and that's a dangerous mistake. They say, well, at the end of the day, I made 40 on that deal, and they put 40. You cannot do that. You have to put 280, subtract everything explicitly on the tax return. You know how in school they tell you, show your work.
Yeah.
That's what you have to do with the IRS. Show your work. Show how you arrived to the 40. Otherwise, you may have unpleasant letters from them.
Absolutely, and that's what you don't want.
Well, I do, because then I make money on that.
Yeah. So one last thing I want to talk about real quick. You mentioned it earlier, like LLCs and incorporating and structuring. What does that matter? And does it matter? And how does it affect taxes and finances of flipping?
Of course it matters. Of course it matters. Thank you for bringing that up again. We touched on that earlier. I just mentioned, and I will want to repeat that again, that this is not the first thing on your agenda. This is the thing that has to be addressed only after two things are taken care of. Two things I want every rehabber, every flipper to take care of before we talk about structures. Number one is make things profitable. Like that may sound, of course. No, I understand. But here is what I'm talking about. If you are just starting in that first year, and your first deal, and let's say we're talking about 2012, because right now we are in 13. 13 is still early, it's still April when we are making this presentation. Yeah. Let's talk about 12. Let's say that you started flipping in 12, and your first deal did not close, did not sell until January. Then you made no profit in 12, but you had expenses. So no structure would help you with 2012 taxes. You didn't make any profit. Let's say you sold one deal in 12. Sold one deal. You did make money. But how much money you made after the dust settled? 30,000, right? Can we take that as an example?
Yeah, absolutely.
Let's say 30,000. But you also had an early business startup expenses. You had to buy equipment, pay for training, pay for attorneys, pay for various advertising, whatever you had to spend money on. Maybe you spend another 10, 15 grand on that. So what you really made last year, maybe 10 grand. That's not enough money where structures will help you. So again, number one, make sure that before you spend effort doing that, your business is seriously profitable. And I don't have a magic number, but let's say when you're at least making 50 grand after all expenses. After everything is paid out, you put 50,000 in your pocket, that's the time where structures can help you. So that was number one, be profitable. Number two, make sure, like I explained earlier, you keep track of every single thing you spend. You have all your receipts, all your records in good order. So after those 1 and 2, now comes 3. Now we can talk about setting up structures. Unfortunately, there is not like one general solution that fits everybody. I wish there was. There are promoters who sell you solutions saying that's how you run that business, and here is the problem. They are good solutions. I'm not bashing them. I'm not saying it's not working. I'm saying it's working for some people. It may not work for everybody. Just like pretty much, everything in the business. But when we talk those general approaches, there are two taxes that you can try to address. One is income tax, one is self-employment tax. You have both taxes that you pay as a flipper. And depending which one is a bigger problem for you, you might want to set up one structure or the other. So it depends. So the big difference between structuring is which tax is a bigger problem for you, and that is case by case. Whether income tax or self-employment tax is the most concern. And secondly, and that's a very important consideration, how much formalities you are willing to tolerate, how much extra work you are willing to do in order to provide it. Because misconception about entity saying is, okay, which entity I need to sign up for? The impression is, okay, I'll pay you a couple $100, let me do the paperwork, so am I done? No, none of the entities work that way. You can do that, but it's useless. In order for that to work, once you set up entities, there are several things that you must follow, and everybody can go on my website, which is conveniently called by my name, www.michaelplaks.com. It's michaelplaks.com. And there are articles that specifically tell you, free articles. There is no charge to go there and read them, what you need to follow once you create entities. So you have to be willing to put some work into that. So those disclaimers aside, that is case by case and work is required. More or less standard solution will be this. You will set up an LLC. And LLC is an entity you set up with the state of Texas. And for a profitable flipping business, the simpler, the more standard solution would be to choose for that LLC to be an S corporation. There are two types of corporations. One is called S, which stands for small, and the standard corporation is called a C corporation. So C or S. You can create an LLC and make LLC pretend to be a corporation. So that is kind of a standard solution. Create LLC, make it behave as an S corporation. That said, again, that may not work for everybody.
Yeah,
that works for many successful investors in flipping houses, but not for everybody.
Yeah, it's
Some
the
people-
80-20 rule.
Yeah, correct. Some people may be better off with a standard C corporation, which has more potential payoff, but also has much more complexity. And people who run partnerships, they may not do either. They may just stick with partnerships, even if it's a partnership between you and your wife. But the key step to organize that is to create an LLC. No matter which that is, partnership, one type corporation or the other, the actual formal entity you create will be an LLC. And then you apply the correct taxation to that LLC, which pretty much does require you meeting with somebody like me and discussing your specific situation. So I can suggest for you, Chris, maybe this thing is the best solution. For Brant, something else may fit better depending on differences in your business, differences on your financials, what is your family situation, do you have a spouse, does she work?
Yeah, absolutely.
You know, and all of these things. So what else do you have? Do you also have rental properties? Do you also run some other business? How much you make? How much money you need to spend? All of that comes into consideration. And one last thing maybe to close, and I believe that, am I right that Nathan is one of the presenters? Nathan Wong from Quest?
Yeah, he should be there.
Yes, okay, so one of the other very tax efficient ways to do the whole flipping business is use your retirement money. Use your self-directed IRAs for flipping. And Quest is, you know, very well respected local company who helps people with that. And during this presentation, during this event, you will have Nathan Long speaking about that. So I highly recommend people exploring that excellent opportunity.
Absolutely.
And if you have any questions, just contact my office. My website is michaelplaks.com. My office phone number is 713-721-3321. 713-721-3321. Anytime. We are here to serve you. That's the only kind of people we help. Real estate investors. Chris, I really appreciate your time. And Brent, thank you for making me part of your great event.
Absolutely. Thanks for sitting down and talking to me. I appreciate it. And hopefully we'll see you at the event on the expert panel.
Okay, good luck everybody. Thanks.